Hello, it's David Darst, and I'd like to welcome you once again to our review. The month of August so far, and we've just got a couple of more days to go. The month of August so far, the S&P 500 is up 1.7% U.S. equities, and that gives a 19% gain for the year. Now, what we call the bodyguards of the market, that's the transportation, that's the bank stocks, and it's the small cap stocks. The transportation stocks are up a total of 1.8%, and they're up 17.7% for the year. That's not bad. That's your airlines, that's your railroads, that's your trucking companies, that's your package delivery companies like FedEx and UPS. The bank stocks are up 6%. Interest rates were up. I'll give you this in a moment. Interest rates were up for the month, and so the bank stocks rallied 6%, and they're now up about 32% for the year. And finally, the Russell 2000, that's your small and mid-cap companies, they have had not as happy a month. They were down 0.6%, 0.6%, and they're up only 12%. They're lagging the market. Why? People have concerns over the Delta variant and how the economy is it going. We're probably not going to have lockdowns, but you have mask mandates, you have social distancing mandates, and you have a slowdown in the rate of reopening. So this is why the Russell 2000 index has lagged. Now, running through the 5 building blocks, the 5 pillars of the market, the monetary policy, we see this as very constructive. The minutes of the Federal Open Market Committee meeting that was held on January 27th, 28th, they were released in mid-August, as you know, and Chairman Powell and the committee said they're making progress. They're making progress on achieving an inflation rate above 2%, and importantly, on the employment numbers. You saw the jobs growth, 900,000 in July, 900,000 in June, and August numbers, which will be released shortly, August numbers are probably going to be up about 750,000. Once you get into October, and September, you could again see maybe 1 million, because these enhanced unemployment benefits will be rolling off, and people will be motivated and incentivized to go back to work. The Chairman Powell gave a talk by video on August the 27th. That was a Friday, to the Jackson Hole Central Bankers Symposium. He basically reiterated that message, but very importantly, he said it's time to start thinking about tapering. That means reducing the government bond purchases and mortgage-backed securities purchases that the Fed's doing, tapering towards the end of this year, of 2021, and early into 2022. So many people thought it would be starting maybe mid-next year. No, he says things are making enough progress. Now, he also reiterated that does not mean raising interest rates. This is very important for the stock market. You saw the 10-year Treasury go up by 10 basis points from 124 at the end of July to 134 as of today. That's a 10 basis point increase. You do remember that interest rates started this year at 0.93%, and they began, that's the last day of 2020, and they began 2020 at 188. So 188 to 93 to 124, and now 134 on the 10-year Treasury. He reiterated you're not going to see interest rates rising too rapidly, and that, I think, calmed the markets down. Let's move on to fiscal policy. Fiscal policy. There you have the $3.5 trillion social infrastructure bill and the $1.5 trillion hard infrastructure, hard assets infrastructure bill. This is going to lead, in my humble opinion, in our humble opinion, to some fighting, some political back and forth once September gets underway. Now, the Senate does not come back from recess until Monday, September 13th. So you can expect quite a bit of news flow there. The fiscal part is not as strong a tailwind, a boost to asset prices as the monetary part. However, it is substantial, but it is not as strong as the monetary. On the economic side, let's take the profits. S&P 500 profits. You're going to go crazy over this. 48% for the first quarter, year over year. The second quarter, which we just finished a few weeks ago, up 89% year over year. The third quarter is supposed to be up 28%, and the fourth quarter up 21%. So look at this. The full year is supposed to be up 42%. Next year, 9%. So you will see a slowing. But basically, the companies have had pretty decent commentary. They've been able to pass on cost increases. There are shortages. There have been a substantial, that's a cost pressure. And we'll get to this in a moment. And the 8.7 million people who are collecting unemployment benefits, that will begin to roll off in September, as you know. The new claims have gone from, they're down about 360,000 on a weekly basis and 366,000 on a 4-week average basis, continuing to decline. Again, positive. The first quarter, the GDP in the U.S. annualized grew at 6.4%, 6.6% in the second quarter, and 6.5% is the early estimate for the third quarter. So 6.4, 6.6, 6.5. The headline inflation number was just released on Friday, the 27th of August. The headline is 0.4%. Personal consumption index, 0.4% monthly, 4.2% year over year. And when you strip out energy and food prices, it drops to 3.6%. So that's, the Fed wanted above 2%. They've got above 2%. And it is, Chairman Powell has basically stressed that he thinks it's transitory. And so far, we would agree with that, so far. I don't think it's going to go back to the very low levels that it was, but it is going to slow down. Now, on vaccinations. Vaccinations is one of the building blocks, and we basically see the economy beginning to gradually reopen. However, the Delta variant, the Center for Disease Prevention and Control in Atlanta has reported that the 7-day average of daily cases, has increased 18% from the beginning of the month till the middle of August. So that is somewhat of a concern. However, in England and in India, you did see the Delta variant beginning to top out. It has begun to top out and to fall. So we are anticipating that will happen in the United States. We don't know yet. 4.84 billion people have been vaccinated globally. And right now, the United States vaccinations are proceeding because, you know, the FDA, the Food and Drug Administration, the government agency that approves vaccines, has moved the Pfizer-BioNTech vaccine from the emergency use to a full-fledged FDA-approved use. So people have stepped up. Some of the people who were waiting, okay, for various medical reasons, various psychological reasons, they said, we're going to wait for that FDA approval. It's happening. Now it has happened. And now 1 million people per day, 1 million vaccinations per day. That's 30 million per month. When you add the total number of vaccinations in the United States of adults, plus people who have had COVID and therefore are immune, okay, it's almost as if they've been vaccinated. You see the antibody levels are very elevated in these people. That is basically, we think, a positive, a net positive for the market. But we will be continuing to watch this one carefully, and we'll report to you on this one next month. The last thing is liquidity, and that's the last building block. Liquidity is enormous. The amount of money that's on household balance sheets, corporate balance sheets, is tremendous. And that is there to be invested. It's there to be invested in markets, invested to be there to be spent, and it's there to be dedicated to higher dividends and higher stock buybacks. So that is one of the chief drivers, is this TINA. There is no alternative. T-I-N-A theme. What are the concerns right now? Very quickly, inflation. If inflation turns out to be higher than expected, we don't see that, but if it does, that would basically cause a correction. Secondly, the Delta variant. In the UK and in India, it has begun to top out and moderate. That looks like it's going to be happening eventually in the United States. Some signs have shown that. If that turns out not to be the case, and it's more prolonged and pronounced than we thought, that could cause a correction. Taxes, you're going to see taxes, and we'll hear more about this in the month of September. You're going to see higher taxes associated with this infrastructure bill, no matter what happens. Valuations are elevated, and the market is highly concentrated in these big 5 technology stocks: the Amazons, the Apples, the Microsofts, the Facebooks, and the Googles, the big 5. So they're doing a lot of the heavy lifting, and that is somewhat of a concern. Lastly, the bear market checklist. What would make me come to you and say we're going to have a bear market? Any one of these 6 things. 1, is the Fed tightening? The Fed is not tightening. They are basically reducing their stimulus, but they're not tightening. So that's okay, green light. Secondly, is a recession looming? We don't think so. We think we're going to see economic growth. Some of the growth that's not happening this year because of some of the Delta variant is going to go into next year. You see Wall Street economists now coming, they're going to reduce this year from about a 6.6 to a 6.4, but next year's economic growth from a 4.2 up to 4.4. So you're taking some from this year to next year. So the green light there. The third one is are the bodyguards of the market: transportation, banks, small caps. Are they underperforming? With the exception of the small and mid caps, and you want to see them begin to do better. We think that's a yellow light. It's not a red light. It's not a green light. It's okay to continue. Are valuations excessive? Make no mistake, in many cases, many of these big tech stocks, they are very high, okay? For the market as a whole, it's to the high side, but it is not super excessive. The next one is investor euphoria present. You know, you've had these mini bubbles. You've had some of the cryptocurrencies. You've had some of the meme stocks. You've had some of the SPACs, these special purpose acquisition companies. So is investor euphoria present? There, I would say in certain spots, not necessarily in the market as a whole. It is beginning to build. So we will watch this one and report to you on this in succeeding months. The last 2 is are the interest rate spreads? Are the interest rate spreads beginning to widen, or are they not? We don't see them. As a matter of fact, they've been tightening as people continue to look for yield. We will watch that one. So we thank you very much for visiting with us today, and we look forward to seeing you next month.